I think most of us understand that we're going to owe taxes on much of the money we've saved for retirement, but we don't always appreciate how much those taxes can be. Kiplinger says tweaking where we invest and how we pull our money out can make a noticeable difference. Do you find that to be true, Brian? And can you help clients navigate this big math problem?
Yeah, taxes is a big problem for wealthy families that have saved and invested appropriately and done really well. It's just...
I'm learning that from you.
Yeah.
Every week.
Well, it's because it makes a huge difference over a lifetime. Okay, making a mistake 1 year and paying $5,000 too much in tax, to a family that has enough to retire, it's really not going to make that big a difference at the end of the day. But understanding how the different investment different accounts are taxed, how real estate, if you own in real estate, is taxed, instead of just handing it to the expert, right? Because I'll explain it to some people and they go, that's fine. That's why I got you to just take care of it. I'm like, no. We got to slow down here. You need to understand the decision you're making so you can repeat it to...
It's your money, not mine, dude.
...your wife when you get home.
Yeah.
Or your husband, right? Because they're not here. And I want you to understand why we're making the decision. So in 6 months when you call back, why didn't we do that again? You remember the reason we took it out of this account, or the reason we made this financial planning recommendation was because... what they have done a lot of studies over the years, and I say they, and that's pretty general, right? But financial planning companies or financial institutions have done surveys, right? And they analyze how much people are paying more in tax for either tax efficient, inefficient portfolios, or just how much they're paying too much in tax for not having any tax planning strategies. It's billions of dollars in too much tax.
Oh, yeah.
And so if billions of dollars is going to taxes, because people are confused and they're going to the experts, which are CPAs and enrolled agents, but the CPAs and enrolled agents, to their defense, don't know about what they haven't invested. They'll know about the real estate, right? But they don't know, because they got to file a tax return, but they don't know that they have $2 million in an IRA and they're 69 years old, and then 3 years, they're going to have to start taking out almost $80,000 a year that they don't need, and they're going to have to pay $25,000 in too much tax. And they're like, hey, you're doing pretty good. You're in a low tax bracket. You didn't know anything. And they just keep on kicking the can down the road versus going, maybe we should be doing something about that. Maybe we should, be paying tax. They don't know about the stock that has grown a lot. There's no dividends on it, so it's not a concern right now, but it's got a lot of appreciation. It's a growth stock. And maybe they should be gifting that to the church, right? Or the nonprofit. They're already given $12,000, but they're away, but they're not getting a tax deduction on it. Gift it to the church. That's gifting. And then they love the stock, buy it back with the money they were going to get from their checking account, and they receive a step up in basis. That's saving taxes. Eventually, you're going to sell that thing, and now your cost basis is higher. And what did you do? Nothing, really. You didn't You didn't pay an attorney. You didn't pay, anybody. You just followed some simple math, right? To look at, well, maybe there's a better way to do this. There's a better way to maybe do exactly what we're doing. So you got to understand, doesn't mean you have to become an expert and you got to get CPA license and, get your enrolled agent and do all that. But not all investments are equal. And of course, understanding what the purpose of the investment is important. The IRAs are very simple, or 401ks, right? You got a 401k.
Mm-hmm.
You've never paid tax on that money, right?
Yet,
yeah. But it's going to come. And so what does that look like down the road? What's the income stream? Well, if you don't have a lot, it's not going to be a lot in taxes. But a lot of families have done really well over the years, and they're sitting here with millions in an IRA, 2 or 3 or more, and they're not paying the tax. So I don't have to worry about it right now. The people that are worrying about it are the people that are coming to us going, I've been hearing you and listening to you for years, and I've been thinking about
coming. This is coming.
Coming to see you, and I get a little
Inevitable.
older.
Yep.
And my person doesn't talk about it or do anything about it. He refers me to the CPA down the road. I went and saw the CPA. He didn't know anything what to do, except maybe you can convert, but what does that look like? And they want $1,000 or $2,000, but they're not talking to each other. And so I said, okay, here's a comprehensive plan that will we will build that shows you exactly what you need to convert to, what tax bracket,
when to convert it.
Right.
Yeah.
We've got clients that have charitable gifting strategies available, or not, excuse me, charitable gifting. They're just bent doing charitable giving already. Well, here's a better way to give, and you didn't have to give more. It's just to continue to do it, but you also get a large tax deduction, right? It could be you're giving more.
You take that money and give more.
Right.
Yeah,
and that's how some people are doing. Like, hey, I'm not really that concerned about taxes. I'd rather just give it away. Right. And so their net is, the same. And they ultimately are helping more people. And so I think
I wonder if I can be a 501c3 charity.
You
They can
could.
just give it to me.
Yeah, you
Or
could
you just put it in my account.
The Brett Sharp Foundation. You just have to actually do some good for people.
It sounds really good talking about it.
That's
It
awesome.
doesn't look good on paper.
So, you looking at all the different buckets of money, people say, well, what's my taxes if I sold this piece of real estate? I wish it was that easy.
Yeah.
I mean, we can kind of calculate what the most it would be, but we can't necessarily say exactly what it'd be because it depends on your Social Security. You got dividends, you got, your W-2 wages, what's the depreciation on this real estate? What does it look like? What's the recapture tax look like? Depending on the state you live in, right? Florida's 0, Virginia is a maximum 5.75. So it is but taxes. It wasn't Charles Schwab. Hold on. Goldman Sachs did a survey, and they found that about 1.25% was going too much to inefficient investment portfolios. Meaning you're losing over 1% on a large taxable account if it's not efficiently set up. So that's a lot of money on a lot, if you have a good amount of money in a taxable account. So you definitely need to be looking at tax planning to find out ways to keep it down.
Yeah, you make me ask myself questions. If you also have those questions, look us up online, retirementplannow.com. That's retirementplannow.com, or call 866-2-PLAN-4, 866-TO-PLAN and the number 4.